What's going on, everybody? Chris here. Just gonna look over oil, Bitcoin, gold, and different dollar pairs, just because it's part of the pretty much the credit market. But yeah, oil looking bullish, to say the least. As far as like supply policy. Policy is not encouraging manufacturers or drillers to drill. So supply is going to be constricted just because of policy. On top of that, we don't know how much the Sauds have left on as far as like their supply, their reserve. So that's kind of questionable. That's probably why it's been so strong to the upside. It's kind of crazy. I mean, we're looking from like 60 to 130, almost double. And going to keep on going, like 140, maybe 150, 160. Retesting the all-time high, or previous all-time high. But yeah, we are waiting for this week to flush out, just because we're suspecting either a coming pump or a coming breakdown. And right now, if we look at the strength on oil, there is no strength. We want to buy when it's oversold, when it comes down here into the H4 order block, or lower into the weekly. The weekly would provide the best deal right here. Come down in this weekly order block, we bounce, reclaim, shoot for all 140. And I don't know, like this weekly MACD, like I want to see the end of the month. I'm not gonna FOMO just because we look at the time and solutions. This is crude oil futures. I don't know. It looks like we get some kind of peak and then dip, and then we come up. But we don't know how deep this dip is. But it looks like on all, like, this is the decennial math cycle, the annual math cycle, and the 4-year math cycle. They are coming down, and we're going to be bottoming out. What that looks like, I have no idea, but I would like to get a good deal. That's buy where it's a good deal, and if this is going to play out, then good. And even better would be if this H4 market structure breaks to the downside. Whenever it forms a bearish H4, we get it on the break to the upside. That would be like increased safety, where we have the wind at our backs, where the bears were trapped and the bulls are starting to take advantage of the bears being trapped and getting a good deal and squeezing them out, forcing them to sell quick. And that's what would cause some kind of random walk or some capitulation in the markets. So that's oil. And the whole backdrop fundamental story with the Sauds and possibly running out of supply, with Russia being taken out of supply because of sanctions, is totally possible as a trade idea. Right now, I'm looking to catch a pump in the market. I'm not sure if we're going to get it. We look here. We just crossed up the weekly MACD. I want to see a pump up at this gap. Like this gap, we're in 4,312. We go here. This is the auto SR. Somewhere, 4,314. Yeah, right around there. 4,290. 290 to 312. We look at the H4. We're thinking maybe, 4,300. It would make sense if we go here to the top of this, in this fake out, 4,300. Yeah, so like that comes up over and over, 4,300. And then maybe this pivot gets respected. Who knows? naked pivot here. I'm not sure if we're going to touch it. It just looks like maybe the range will be respected more than the pivots. These pivots, you never know. It's always after the fact because it's so raw. It's like reading the Old Testament. You have to kind of have some intuition and context to be able to piece together what a non-biased, neutral thing would mean. But yeah, like right now, we're gonna watch where we close on the week. But as long as we stay holding here, we're good. We just need, especially if we keep on making closes above this 0.382. We did make a kind of like a swing failure pattern. We're holding, and we're just looking for that resumption, that breakout out of this symmetrical triangle that's forming, breakout, resume, and it's just kind of a wait and see kind of deal. But we're looking pretty good. We look on the daily range that we drew in from a while back. It kind of double bottom here. This is my H4 naked pivot. Touched it, and then look what happened. It bounced off it, and then this looks like it's just making a double bottom bull flag, and totally ripe for possibly hitting 4,500. Whether that's possible or not. Let's kind of consult different things. According to the Will trend, that would be maybe a little too high, 4,500, but 4,300 sounds like just right for a possible near-term, short-term swing to the upside. So we'll see what happens. It looks like the institutions don't know which way to go, but as far as accumulation, it's looking good. It went through all the way through, and it looks bullish. It's consolidating. Don't know what else to say other than when we get up here, be careful. Right now on my TSP in the Thrift Savings Program, I'm 100% in the S&P 500, and when we get close to the target, I'm hoping it happens in New York or London session, because then as long as I submit the flip of allocation and my portfolio in my Thrift Savings Program, it's basically the retirement fund and the government, switch it to I think it's Class G, which would be like cash. And then Class F is like bonds, like high yield bonds. I'm going to go to Class G until maybe we hit that weekly 200 that we got on the pink line right here, and we break through the Corona Nuke Low anchored VWAP. But we have to wait and see. According to this Timing Solutions, it seems like across the board, whether it's the S&P 500 or oil, we got some kind of event, like in the middle of June to the last week, third week or fourth week of June. And so this is oil futures, and we saw what it's thinking. And if we look at the S&P 500, it looks very similar. And with flipping the allocation or rotating my portfolio in the retirement, that's more of just it's not financial advice. It's just more what I'm doing, and my conviction. I'm basically, if I've got conviction, I'm going to act on it. I'm acting on it, just based on what I see, and it makes sense. With if you take into account like gaps, gap theory, and I guess efficient market hypothesis, and things related to that, and the current financial political climate of rate hikes and possible demand destruction. It makes sense that the Fed's going to want to try to get that under control by being really hawkish. And they've been that, and then they're kind of trying to flip that. It's just, I think no one knows or is questioning just when that's going to take place. But luckily we have these math cycles. Not that it's like the holy grail, but it's something to bet on. Like it's something to hang our hat because it's math, and it's kind of so. These are like the correlation probabilities, and if it's leading or not necessarily. See, it's zero's coincidence. It's just matching exactly. So we'll pick the highest ones here. And as you can see, like in like they're here on the SP 500, it's the third week of June. It's the third week of June, and then we go up, and maybe that's a reclaim. I guess I already reclaimed this low. Maybe we do a double bottom. Like that would make the most sense, or a lower low. If we were to take a look at my naked pivots, would be where the next naked pivot would be. So it's really hard to discern where exactly it's going to land. But according to here, we got a gap all the way. It doesn't seem that far, but I guess to others it's like crazy far, from 4,000 to 3,500. But I'm suspecting that this is where we go. Third, fourth week of June, ending the quarter, going into July, beginning of the second quarter. Let's see. No, third quarter. I think that's the third. January, February, March, April, May, June. So the beginning of the third quarter. So we'll see. It's not an exact science, but it's something we can bet on and have our hat, hang our hat on, because like we got clues, and we're just gonna wait and see what happens during those days. If it's nowhere near that, then we could just scrap the thesis, scrap the target of where we would buy. But in order to, like I have, as far as an invalidation of that thesis, where would we be wrong? If we hold this low, through the end of the quarter, then I would say we're wrong. It would be this low right here. So right now it's forming a swing failure pattern. The bears are, this is the invalidation right here. The bears are invalidated. This is support now. It got reclaimed. It closed above, trapped the bears here, and now it's consolidating, getting ready to wind up and launch up if it can. And we're going to see if we get rejected and then come back down and then get rejected off of that monthly open and then close below that low right here on this, which would send us probably a little bit lower. But we're kind of just waiting and seeing. Like, we need time to go by before we can actually have some kind of thesis progression of just building evidence that's increasing the affinity score or just the likelihood that it's correct. When I say thesis, it's not proven correct yet, and we need time to go by. We need market closes on the daily or the weekly and see where the opens are and closes, and I like the H4 in the weekly and also day by day. That's kind of why I make these videos around that time. But that's kind of just my plan. But we're looking bullish. We got a double bottom bull flag forming, and we're in the first week of June, so I wouldn't be surprised if we pump and then third, fourth week we dump, according to the math cycles, but not that it would dump. We're guessing it would dump based on what we see, both in oil and the S&P 500. Just because the dollar's been so bullish, you just don't know. We'll take a look at the dollar. The dollar is looking crazy bullish. We look at here, and we were to kind of make it more into view, it's got a huge double bottom and it's making a bull flag. It's holding this trend line there, and as long as it stays here and it holds, man, this is a huge threat to the market. And I almost think at the end of this month we can have a close above this 0.13 level, above 105 on the dollar, on the Dixie. We can have a quarterly close above here, come back, retest, and then launch up here, and then maybe once we get up here, and we. So this is assuming that this happens on the dollar in the exact order, like happening where on the, I don't know, we get maybe a swing failure pattern going into the close of the month, or we start closing higher on the dollar. You know, it's kind of just why we need time to go by. It's because we're just ranging. But if we look at the position, it's likely that the dollar will jump. We have to see the close of the month. It's too early to tell you. The same, though, is with the S&P 500, but there's so much resistance that it's under. With the dollar, it broke these highs. It closed above all these highs, and it broke the bears. It had a market structure break, and basically the bears capitulated. And that's why we have such a strong move. But and then we have the bears that are in this wick here, and they've been selling off, and we're seeing it hold, and we're going to see, are those bears wrong? And we need to see the close of the month. But with the dollar being so strong, the case that the S&P 500 can drop is very likely if the dollar continues higher and higher. And then with the oil, it's fundamentally strong with questionable supply from the Sauds. We just don't know. And definitely possible to reach 150 or 140 on the West Texas oil crude. I mean, it's been so strong, it's been killing these bears right up in here. If these sellers here were still there, they're getting squeezed. Like, they got squeezed hard on that one, on this wick. It probably hit all those stops. All those bears that were in here are gone. And now we're consolidating. We need to see the close of the month and the quarter and see where we go from there. But I would follow the timing solutions. Like, I mean, nothing wrong with being patient and waiting for the end of the quarter and then making our decision on how we're going to enter. But as far as my concern, near the end of the quarter, looking for some kind of H4 market structure break to the upside. So right now, we had a market break to the upside already, and we're looking for a breakdown for a change in direction, and that would be this order block moves with it. But H4 market structure break to the downside in June would be a big warning signal for me to get out. Because if we're going to drop that hard all the way to 3,200, 3,400 in the S&P 500 ES, that's scary. I mean, we're all the way at like 4,000. That's a big drop in price, and not necessarily a crash, but it's alarming. And it would be a really good deal if you're correct, and that's the thing. We got to wait and see if we are. It's just a thesis, but let's go ahead and see the PE of the S&P 500. Are we above the mean? Are we above the median? So on the S&P 500, the PE is 20.83. So we're above the median and the mean. We're still overbought. We're still overbought on the PE on the S&P 500. So, treating it like an RSI, we're gonna see a reversion to the mean. Like that's the thesis and the probability that we're putting forward. We got the math cycles, and then we got the idea of mean reversion and the context of the current situation with Fed policy. with rate hikes and the dollar pumping, and that to me is enough. Yes, like it looks like the credit market is taking more of a risk on appetite. I can see it. You can see it in like whether it's the LQDH or HYGH, or if you took what is it called, TLT versus junk on a pair, you could see that junk is outpacing TLT. So it's looking like the credit market is ready to take on risk on appetite, but they might be early. We just don't know, and that's kind of why I like these math cycles, because I like to kind of have invalidation and validation of just different things, and then kind of what is the bulk saying, what is the context of just the overall picture, whether it be government policy, world outlook, conditions in the environment, sanctions, or different things like that, and really make an educated decision or guess on, and then also if you include technicals, it's less of a guess, because you are putting restraints on your decision that would force you to be disciplined or be patient, and have qualifications. Whenever you qualify something, someone, you have a higher chance of being right or avoiding a bad decision. And you can do that with technicals. Not always. There's always chance. Chance happens to all. But with good technicals, you're closer to being right than being wrong, with the right size risk management. But don't be. This is advice to myself. Don't be betting the farm, but just some healthy risk. Enough that you wouldn't mind. I guess. I'm not, depending on if you're trading leveraged or not, be careful, but don't get into a spot where you can lose it all. Get to a spot where the loss is small. Keep it around 1%. So then, like 1% is very minimal. So going forward, that's oil and S&P 500. As far as Bitcoin, Bitcoin is a little concerning because they had a monthly market structure break. Right now, it's putting H4 pivot in. Could be consolidating into this range, or this area where there's resistance, but it is good. It's a good sign. We might be forming some kind of double bottom, or like a bulldog. This is the tail. This is the foot, back foot. This is the back, and then front foot, and then bull flag form right above the monthly, and then launch up all the way to possibly 37,000. So we'll see. This sideways ranging is not bad, but it's not necessarily not the best. Just because it could get shut down. But the fact that it's above the 24 moving average is good. Let's see if it's above the 24 over here. According to this, it's not even close to the 24 moving average, but whatever. We did have a H4 market structure break to the upside, so we're waiting to see if it's just chop and we're getting fooled, or if we're heading higher. But right now it's holding. It's a good sign. And we have a huge gap on the weekly on this broker here. As you can see, this is the monthly market structure break. So that break means that the bulls capitulated. The bulls capitulated on a high time frame level, and it's not necessarily good, because it's very possible that this is a bear market, or like indicative of a bear market, and on a monthly time frame, that's very significant. So any pump that I would get in Bitcoin, I'm selling off big time until the end of the quarter. So it looks, it's kind of almost all saying the same thing, with it, whether it's oil or whether it's S&P 500 or Bitcoin. It all looks like the resistance is so high, and are hard, and the Fed policy is so tight, the dollar is making it hard that it makes it hard not to believe there would be a rejection of any significant pump into resistance. Um, so I'm targeting around 37,000 Bitcoin. Being really sensitive about it. Once it gets really close, I'm selling it off, pulling it out, and waiting until we hit some kind of bottom, and I'll be watching the S&P 500, and then I'll take a look at Bitcoin when I think we've had enough market structure break around a low enough level where the gaps are filled in some way, and then move forward from there. But it looks like it could trap a lot of people into thinking we're going higher when actually we might be getting faked out, where institutions might be controlling the narrative, and I don't know, it could be just a mix of things. It could be the institutions watching the credit market or the Fed policy, and then they make a decision based off that, and then but just a big enough group of people with a big enough amount of pockets could definitely move the market and a downward faction. But I've been hearing the puts haven't been that strong, and the strongest they were when probably February, March. But it doesn't look like it's that strong now, from what I've heard, like the different podcasts of investing and trading. But Euro USD, so here's another thing that's really interesting because it's related to the dollar. We know that if the dollar pumps, the market will drop. So we got a gap here on the Euro USD, and it could get filled at any time. It's just a matter of time before it gets filled, and it's just so odd looking. It like to be bullish on the euro looks really scary. Euro versus Euro USD. To be bullish on the euro looks very scary. It looks like there's a big gap right there, and looks like it would want to fill it. I'm referring to like this space right here, but I don't see why not. We can go up to the gap above it or the order block before we get rejected on the weekly. If we look at the H4, we did have a break on the H4, so it makes sense why we're ranging, but we did have a swing failure pattern forming, bounce on the 24 moving average, and it looks bullish as we're holding on these at support at the low, and I think it's going to try and shoot for the 72 moving average on Euro USD, and once these let's see if we can get a faster thing here. So we're waiting for like a bearish order block to come in. Maybe it needs to come down a little more or go sideways a little more, but it's not looking. We could look at Euro USD on the RSI. Where is it? There it is. There's no strength right now, and it makes sense why it's going so slow and consolidating. There's no strength in the RSI, so we're waiting for some kind of news or key event or something that pushes it in a certain way to where a strong move can happen. So USD JPY, we'll look at there it is. So it's been overbought. It had a huge comeback. It's like going straight up, like out of all. It almost looks like Bitcoin, like USD JPY. It looks kind of crazy. And so Japanese yen is like a risk-off pair. So whenever Japanese yen is increasing in power, that's when it's like the world is really scared. I mean, the world is scared when they go in the dollar, but when they go in the Japanese yen, like they're really scared. So with the Japanese yen becoming so weak, it's crazy. Like the move that it put in within the last week is just astonishing. Just how much it moved. It moved from 127 all the way to 131. I mean, it doesn't sound like a lot. That's like 4 points. but it looks like a lot on the chart. But yeah, we had that H4 market structure break, retest, resumption, and now we're testing the highs, the bears, and we're seeing if we're going to go higher. So then again, that story of the dollar, if the Japanese yen's weak, the euro's weak, that's bad, because, or at least like it looks like the euro is going to be weak because it would fill that gap. We don't know where it would close, if it would hold or if it would go make a new low. But with the USG JPY being so weak, it looks very scary, just because that would add a lot of strength to the US dollar, and that would not do good for the world of the markets, just because that's just how they behave to a strong dollar. Look at gold. Gold has been oversold. So right now there's a lot of selling going into this gap. Maybe they're going to try and fill the gap on the weekly, and we'll see what happens. But with the strong dollar, it's kind of questionable whether this will hold. On the H4, we had an H4 market structure break already. Let's move this to this one. So we had a break to the upside, but man, it looks like a swing failure pattern for the bulls. So now the bears really keeping that thing under the 200 moving average on this chart. So it's not looking good for gold. I mean, if anything, gold going sideways, sideways is really good. I mean, it's not really lost that low around 1,600, around there, 1,600, around that weekly order block. So one thing that will be interesting is, what happens to gold going into the end of Q2, going into Q3, and then also Q4. We can try and make a guess with timing solutions. Let's go ahead and see what would it be. Like so far, we've gotten a lot of charts on timing solutions that are up and to the right, from the bottom left to the top right, going up, but you never know which one's going to be a counter trade. But it is a good sign if gold doesn't go up a lot, because gold is also indicative of a recession. So the fact that gold is not really moving is really good for the markets to actually pump. So decennial, annual, and the 4-year. And then coincidence. So according to this, let's see, what's this one that's going up? I'm guessing it's this one? Yeah. Well, let's see. These ones that are inverted or negative, I wonder if I should really... Well, that one's positive and it's going down, so that's weird. Yeah, this 5-year treasury note is going down, and this one, this dollar currency is going up. And yeah, it's so weird. So, I mean, to me, it makes sense that this would happen, where this is the general committee consensus, and then it looks like maybe with that rally, we hit a double bottom here. And who knows where that's going to be? We could try and make a guess. My first step is look for weekly gaps, but that's one right there. Maybe go back up a little bit more. Back it up. Here, we need to put that indicator back in. Take it out. End gap. Okay. Objects, take these out. And then get that back in there. Gap. Gap, where you at? I want to resave this in here. Save for monthly slow. Yep. Just double check. That's exactly what it is. Aggressive mode, false. Yep. Weekly slow. So it looks like that's the only weekly gap. Maybe we jump into this monthly bullish order block. So that's the best guess that I got. That would be really cool. Like the trade would be ride the S&P 500 after the low. This is a thesis being put in beginning of Q3 going into Q4 possibly, and then rallying, and then flipping the and rotating the money into gold, buying at the bottom here. That would be like a really awesome move, just because that would make sense for the future, because the future's looking very uncertain, especially after the election. The 2 and 10 year inverted, you just don't know. And after the 2 and 10 year inverted, gold will rally. That's not something that's kind of questionable. That's just how gold behaves when we're getting close to a recession. And after this year finishes, it makes sense that we'll get closer and closer to that average of 6 to 24 months after the 2 and 10 year invert of when that would take place. So I wouldn't mind buying any kind of entrance into this monthly order block. If we were to take a look, so we got around 1,450. Let's take a look to see if we can find any naked pivots. That would be interesting. Take a look here first. So here's the spot. So that's kind of close to 1,400. We can put a range on that. See what level that is. So that would be in the 0.618 level. But I think it would bounce off this 0.382. I really think with this this line going here, this is where it would stay bullish. Is that it would bounce right here around 1,500. Now we want to see kind of where that naked pivot is. This might be it. Here on the weekly. Yeah. So that one's a little bit lower, but we were thinking if we went to the bottom of the monthly order block, it would be near 1,400, and we have all the way up till 1,600, which is the 0.382 level. So we're just kind of going to dig for possibly where that naked pivot is. Technically, you should just look for the naked pivot and then you stop and then you wait for a market structure break. Here, this might be it. 1,600. This is a good one. It doesn't look like, since it left this area, this is the gap. This is the where it would want to fill. And I think it hasn't gone near that. No. So that would be a target around 1,000, 1,004. How was it? 1,000. Oh, it did touch it. Yeah, never mind. It's this. Maybe it's this one. It's this one. Found it. I don't know. Kind of questionable whether that's a naked one. I mean, this is right here, but this test right here makes it questionable whether that's a good one. Yeah, I don't know. I'm thinking that weekly. It's just you know what? We're on GC. Let's try XAU, because from Mwanda. Maybe we were looking at something that might have like tainted data. Like this one, it's got different pivots here. So here we got around 1,500, a naked weekly. So that one makes more sense. So I'm thinking this is a better, more high quality place to give us signals. Even if we were to look at this these trend lines, it makes sense that it would go around here. See if we can get a range that we can put in. Here, so 0.382. Let's get this pivot in there. So it'd be at the 0.5 of this macro range. So that would be bullish, and that would be good. I mean, it would be in the monthly order block. The monthly order block goes all the way down to 1,450, and then technically we're above 1,450. We would be at 1,480. That would be where the 0.5 on the Fibonacci range would be, and it would make sense. Like here, it has a high chance of holding just because of the Fibonacci range. We just got on this chart so we can see if we have any H4 naked pivots there, but that's looking like the best contender as far as like a possible target near 1,500, just right about. Yeah, so let's go ahead and take a look, see what we can find. So here, this is where it looks like we have a naked pivot here on the H4. So this is looking like a good zone, 1,400. So that's kind of where we were kind of guessing as to like where it might be, the bottom on gold. If our thesis played out, gotta put these conditions, but it's right where this trend line would be on the macro trend line. Yep, it's synced, so then we can see it on a bigger view. So it's right where this trend line is. It would be a really good deal. It's 1,400 on gold, and then it would be a nice swing failure pattern if we reclaim this low after December on the timing solutions. So we're taking a wild guess that it's going to go fill a gap, and that we're picking where the gap might be just based on kind of what we see in the technicals. We got a monthly order block here. We're kind of guessing that this weekly market structure break will happen. So that would be kind of the first sign we would look for it to happen, or to actually target gold to go there. We need a weekly market structure break. Right now it's bullish. It's the only thing that's broken is the H4, and it tried to break up to the upside, got rejected off the 200. So being under the 200, the more we stay under the 200, the more confident we can get on breaking that weekly market structure, and then coming down into this monthly, just like it did on Bitcoin. But the one on Bitcoin, the monthly broke, and we're guessing that this monthly won't, and that it's going to touch these gaps on these naked pivots around 1,500 and as far as 1,400. That's the thesis. And then if we were to say, based on the macro range, that it would come down to the 0.618 roughly on the Fibonacci, which would be perfect pretty much, or 618 of the 618, between the distance between the 0.5 and the 0.618. It looks like it's pretty much the 618 of the 618. But around this level of the 0.5 of 15,000, 14,000, definitely I'm going to be keeping an eye out for any buying to take place going into the end of Q4 in December, which would be really interesting. But also because most leaps would end in January, so it makes sense that possibly the market pulls back, or we get some kind of weird events happening into the beginning of the new year. And then possibly we put in the head of the S&P 500. We got it the left shoulder already in with the high that we're under, and that would be really interesting. We would probably, we could touch the Corona nuke low, which would really make a head and shoulders, because we would have a neckline and a shoulder line. That would be really, really weird, because that means we would be trading sideways possibly for a decade. But if that were to be the case, that's kind of why I'm trading. But in the portfolio for the TSP for retirement, probably going into December, after all those gains, I might switch to either bonds or cash. You just never know. I gotta look to see how the bonds behave with I think it's Class F on the TSP, with the market going down. But I'm guessing I need to find something that's kind of like a risk off, to where I can gain money on a possible crash after December. But I won't really make those steps until we have a weekly market structure break on the S&P 500. Once we start breaking all the bears, making a new high on the year. But once we get a weekly market structure break to the downside, or maybe even H4, I'll start prepping for rotating the money, like most likely, like if we get some kind of keeling over effect on maybe a daily market structure break, like the one between the H4 and the weekly. Maybe if we get a daily, maybe I'll be more adamant to move on making changes. But this close on gold on the quarter, it's putting in this orange pivot. It might be naked until the end of the year. So that's something where it's really promising for the bulls, for gold, if it were to remain untouched, and the gold were to, I guess, slowly decline. It does look like, though, that this would be a head and shoulders kind of deal. So we got the bears, the sellers. It's sold off these wicks, and it's also made this deviation, or the head and shoulders thing. and this is where the bears used to kind of make their selling happen, or like as an anchor point or point of reference, and then we get sold off. We already hit resistance here a couple times. Looks like a double top right here. We start taking out these lows, and then we'll start heading towards the support area. But what we do want is to hold this this kind of bull flag or bull pennant. That would be ideal if we hold this for a bull pennant and then break out. So that's like the one upside of gold, is that it looks like it's forming a really huge bull pennant. We just gotta wait until it's away from resistance, away from being overbought, away from just being overpriced, and coming down. And it would be a really good deal for the future, just because we already know the 2 and 10 year inverted, and we're expecting a recession, and gold does well in a recession. So that's something that I would recommend to myself, not recommend to anybody else. This is just me kind of making a verbal diary and a video to myself, just so I can talk through my thoughts, just because if it stays in, nothing really formulates as like an idea, a plan, steps in the plan. What would be my invalidation? Where would I be wrong? Where would I be right? Where would it start to gain traction? What would the milestones be for that traction? And I have to talk it out in order for me to really begin moving forward with that. But I think that's it. As far as Bitcoin, I don't know where the low would be. There's all these gaps, and it could be any one. Usually the best way to approach it is you do it gap by gap, and then you look for any kind of market structure break to the upside. Usually you want to do a higher time frame market structure break to the upside, like a weekly, before really getting involved, just because there's a high chance of being wrong in a bear market on a faster time frame. And we have no idea where the low would be. We can only guess, and the earlier we try to guess, the higher chance that we could be on the losing side, and that we'll have to wait a long time for it to come above water. So I need to like temper the attitude, or the possibility of buying the bottom on Bitcoin. But there are these gaps are great targets for accumulating spot Bitcoin, for averaging down your position, for Chris to do, and it's very likely I would do, as I gather money out, savings outside of my TSP. But that's just the plan for as like a atypical analysis that I do. This is just the plan for going into the end of the quarter, the end of this month, beginning of July, the beginning of the quarter, just what we're going to be looking for, going in all the way into December, the end of the year, into like beginning and end of Q4, and then possibly rotating into gold after that rally into Q4, and really seeing just kind of where the market structure breaks happen, the opens and closes on the quarter, on the month, and the week, and take it kind of week by week, month by month, quarter by quarter, year by year. But we got to be really vigilant. Just everything that's happening, just because it does, the credit market, no one knows what's happening. It's very like atypical, unusual for just all participants, young and old, who've just kind of seen what's been happening. And the Fed is even kind of perplexed as just the next steps. It shows in their verbal redirection, or verbal intervention, and we're going to see where the limits are. And the more we're patient, the better chance we have of making an accurate, appropriate judgment and decision. So thanks for watching. See you in the next video.